Yo, I'm Brendan, and sometimes debt makes you money, even debt on a depreciating asset like a mom car. And today I'll share the very simple way that we made a profit by taking out a loan to buy my wife's car. We did this for the last 3 years, but there's a problem now. This technique really can't be replicated very easily, at least not yet. So here's what we did. Following everyone's financial grandpa, Dave Ramsey's advice, we saved up cash to buy my wife a larger car once we had our second child. We paid ourselves a monthly car payment leading up to this. So for years, we transferred money into a dedicated savings account that was called Next Car. And so we'd be ready whenever that day came. After we decided which car to buy, we planned to take delivery of it, write a check, and then ride off into the sunset, right? Like the simplest thing, doing exactly what Dave Ramsey says, avoiding debt. And it makes sense, right? If you had an appreciating asset like a home, it's one thing to have debt on it because at least the appreciation might outweigh the negative force of the debt that you've taken on and the interest rate there. But for a car, it's depreciating. Like everything but a super high-end specialty vehicle like a Koenigsegg or a Pagani or a 911 ST or something crazy like that is going to go down in value. Any of the cars us mortals drive are depreciating. And so our plan to pay cash made sense until we found out there's a better plan. Instead of writing a check for the full balance of the car, which was like $35,000, we decided to take out a loan. We went to Ford Credit. We put our $5,000 down payment in, and it's at this point that Grandpa Dave would have thrown up in his mouth a little bit. But sometimes we have to diverge from the expert opinions to make more money. Sorry, Dave, we're here to make more money. We're here to have a better life. We're not here to take the safest route possible. So what's the reason for doing this? Why would you just take out a loan when you have the cash already? Like we've done the hard work. We've saved up the cash. We could write a check right then. No car payments, simplify our lives, super easy. The reason we took this detour was because Ford was incentivizing the rate heavily if you went with a 3-year term for the loan. So overall, the structure is 36 months of payments, but at 0% interest. And here's a hypothetical question for you. Ask your spouse, ask your friends, what would they do in this situation? If you were approached by a bank and the bank said, "Hello there, we would like to offer you a loan, a 0% interest loan for $10 million. Would you take it or not? Because all you have to do to profit in a 0% interest loan situation is make the tiniest little bit of a gain, right? You just need like a 1% APY or even a 0.5% APY and you'll come out on top. I'll give you a moment to have your own answer to think about this for a sec. And now I'll give you my answer. I absolutely would, because I'm confident that if I had that money that's totally interest-free, then I could turn a profit out of that. I can take that raw resource and grow something. And in the situation with my wife's car, we made more than just a tiny profit on the cash that we'd saved to buy the car. So the price was $35,000. We put $5,000 down, which meant we had $30,000 in cash just sitting there to do something with for the next 3 years that would increase its value and justify having taken out this loan. Because there are downsides to the loan. Like outside the interest rate, you're also using up some of your lendability when it comes to like buying other stuff. So if a bank sees your debt to income ratio is all used up, you're not going to get a new loan. It also hits your credit score. It's also a bit of a headache to put up with this thing and make payments and not be late and all that jazz. And if you watch my videos before, then you know what my preferred method is to take some money and turn it into a bigger amount of money. We invested in the stock market. And I want to share with you exactly how well it performed. I'm using a free website tool called Portfolio Visualizer, and it's awesome if you want to check out how your money would have done in a number of different scenarios. So you can say like, oh, if I invested this way at that time, how much would it have grown or not? If I invested in that instead of this, you just backtest everything basically. So what we did in 2021, we bought the car and we invested the full $30,000 into one of our accounts. In general, our investment philosophy is basically almost always into broad index funds. Very rarely do we ever buy an individual stock or anything that's really like dividend oriented or any kind of crazy call option ETF or something like that. Technically, we have a tiny bit of those things, but the vast majority of our invested net worth is in broad index funds. So using this free website, how did our $30,000 perform over the last 3 years? If you ask me, amazingly well. In 2021, it was an amazing last 4 months of the year because we bought the car like at the end of summer, so we didn't have a whole lot of time. But then in 2022, it actually went negative. We had a big fat downturn of 19% that year. That was a rough year for us investors. That's the kind of year that the doom and gloom people just wait for. They love this because they either want to sell you an alternative investing method or they're going to tell you to go buy gold or they're going to have some crazy scheme to say, look, I've been telling you, you can't just invest in the stock market. Look, it goes down 20%. And that was not a great year. You know, overall, it basically like zeroed out the account again until we were back to like $30,000. But in 2023, it was a positive, amazing, growth-filled year. And then now, of course, in 2024, it's been a record-setting year. It's been incredible. And just for transparency's sake, I'm using Portfolio Visualizer here and not our actual account. Like I'm not showing you screenshots of Vanguard or whatever, because we threw this $30,000 into another account with more than 30K in it. And so the returns would have gotten like intermingled with that and it wouldn't be able to be accurately isolated. So that return that we got from just the 30 grand would have been kind of muddled. So this way I can isolate it and just show you what's only that $30,000 chunk. So what was the net result of doing all this and how much did we come out ahead? Well, over that course of 3 years with the money invested and then just closing our eyes to it, right? We're not day trading. We're not picking stocks. We're not working on this thing. We've just thrown the money into that place. It is doing its thing and we do nothing else. We grew that 30 grand by over $8,000 in 3 years. And not only that, we kept our cash. If you think about it in terms of having that money still available for your life, that would have been extremely helpful if something came up that required a lot of cash. Like what if some kind of life emergency, some adulting thing would have happened? We could have gone, okay, I'll take the cash. Boop. And if the alternative was true and you had dumped all that cash into that depreciating asset on the driveway, then you can't get the cash back out of it. You would have then had to go find some way to either generate cash or get a loan or whatever. But for me, the thing that stands out the most is how very little extra work this was. We spent a few minutes to sign the loan forms. I set up auto payments to happen every month, so I didn't even have to do that. And as a result, we made enough money to buy a quarter of another car. But I can hear your comments and concern now because we did take a risk investing the cash. The stock market could have had a crazy 3-year downturn and it would have made for a very different story than this. So I don't want to glaze over that and act like everything is sunshine and roses in the stock market all the time and nothing will ever be different for the rest of all humankind. That's not going to happen. But I do feel like this is a decent example of how risk and reward are tied together. If we hadn't risked anything, we paid for the car, there would have been no chance that we had a reward on the other end. We couldn't have benefited at all. You got to risk it for the biscuit. It's a very cheesy thing to say. And because I'm so confident in the stock market and because that's where so much of our net worth is, I'm planning on just leaving that money in there. And now there's yet another thing to look forward to. Because if you remember, we still have that $38,000 plus invested in that account. It's still working for us and growing, even though the car's paid off now. We're not making payments. We don't need to spend that money on the car anymore unless something goes wrong and breaks. But I think we can drive the car for another 5-7 years pretty reliably. And so if that $38,000 plus remains invested for the next 5 or 7 years and it makes 10% per year, that money could potentially grow enough to get us an entire car 100% for free. You know what that means? It's spreadsheet time. So if we drive this car for another 7 years, it grows at 10% per year. That means at the end of that period, the car will be 10 years old. So it'll be, driven, used, depreciated. But by then that investment would mean that we could take out $44,000 over and above that initial 30 grand we invested. So I'm not saying the total value would have grown to 44,000. I'm saying the total value would have grown to 74,000. So we grab that 44, we buy another car with it, we leave the 30, and the 30 keeps growing. It's like the perpetual car creation machine. That sounds crazy to even say it out loud. That sounds kind of silly. But if it kept working like that, you can see how the math would work, that you could keep getting new cars. Or instead of taking that money out, we could keep the train rolling. And if we can find a 0% interest rate again, then we could do this whole process again. Hold on to the cash, keep the money invested, make the monthly payment, and everything keeps working. But like I said, today it's almost impossible to do that because today's interest rates are so darn high. But I'm not just going to assume. And so if we wanted to replicate this whole process today, I wanted to see how impossible it really was, because we know that the average car interest rate right now is like 6%, 6.5%. But if we could find a 0% offer from an automaker, then invest some cash that we saved up instead of spending it on the car, then it's possible to do this. So a little bit of Googling, and I found this article. The best 0% APR car financing deals in October 2024. I didn't even know there were any 0% car financing deals right now. And in the future, this will change, but let's say you're watching this in April of 2025, just look up 0% car APR or 0% financing car or something like that, and you'll get a similar result. But right now, both the Chevy Silverado 1500 and Silverado EV have an offer for 0% financing for 3 years. That's pretty awesome. The Jeep Grand Cherokee 4xE, 0% for 6 years. That's even more awesome. Functionally what that means for us, if the term is twice as long, if it goes from 3 years to 6 years, is you just have a smaller payment. This to me is even more appealing than the last one. Obviously, the vehicle has to make sense to you. Don't buy a vehicle that you don't actually want. But if you're looking at one anyway, this is a pretty amazing option. Ooh, the Ioniq 5. This is a cool little electric hot hatch, 0% financing for 5 years. That is a cool deal. I haven't looked at this before. I'm literally looking at it with you right now for the first time ever. So I'm discovering this with you. 2024 Mazda 3, 0% for 3 years. Not a bad deal. Those are fun cars to drive. A Lexus RZ, kind of a smaller crossover, 0% for 6 years. Nissan Titan, 0% for 5 years. Volkswagen Tiguan, 0% for 5 years. There are so many options. Subaru Solterra, 0% financing for 6 years. I don't think anyone's buying these. I don't think many people are buying Dodge Hornets either, but technically 0% financing for 6 years on a Dodge Hornet's a possibility. Mitsubishi Outlander, probably not a huge seller. Some of these I think are incentivization offers, because if you're going to go spend 6 or 7% interest on an F-150 and you get a Silverado instead, it's pretty appealing. Outlander, 0% for 4 years. GMC Sierra, 0% for 3 years. And a Kia EV6, 0% for 6 years. That's another cool car. EV6 GT is actually pretty fast. And that's all of them. But just the fact that any of those deals exist, that's pretty amazing if you ask me. I guess the one factor there that I overlooked that I didn't confront in the beginning is you're assuming that you can afford the payment, right? But if you were able to save up enough money by giving yourself a car payment over the years, then I'm assuming that you also got some money saved up to where you can make that car payment. Granted, for us, a 3-year term on a $30,000 loan was a lot more money than I actually ever planned on spending on a car. Over $800 a month is a lot of money to part with. So there's got to be some flexibility in your monthly budget and in your income to make this kind of thing work. But if you can, I think it's a very powerful kind of hack. If you have any stories or any experience in doing something like this where you can kind of hack the system, hack a really low interest rate and benefit from it by multiplying that money, then leave me a comment with that. Otherwise, the secret comment word for today is tired, because you could say you're tired, but also your car is tired, literally. Bad dad jokes. Thank you, members, for always being here and supporting me every single month, and I'll see you guys in the next video. Bye.